Hello trading friends and welcome back to Forex Focus, brought to you by tastyfx. Really interesting story developing between North American currencies, not dollar CAD, but dollar peso. Really seeing some upside pressure for US dollar, downside pressure for the Mexican peso. We'll get into the price action in just a second, but we had a Mexican election about a month or two ago and saw some price action off of that. And now going into the U.S. elections, and all the back and forth that we've seen between Trump and Biden, but now Trump and Harris, also seeing some, I would say, fear go into the currency market. The North American currencies, US dollar, Canadian dollar, and Mexican peso here. And a lot of it going into US dollar, as we'll see in just a second. But yeah, so much back and forth coming out of the Mexican election, which we'll highlight in just a second. And now also likely to continue some of the volatility as we're still a few months away from the US election. But let's take a look at the price action. We have here a dollar peso market that has run up to 19 pesos around mid-June, and we'll highlight why that's an important time period in just a second. Market came back off under 18 and now is on another bullish run here for dollars, bearish for pesos as we enter the end of summer. And this is a market that has been quite volatile in recent years. Has gotten as high as 25 and all the way down to, as you can see, traded below 17. And so can really move, especially if this bullishness continues, could very well get back to 20 and above. But right now, everybody eyeing that 19 level, which we have not hit here this year. But I do want to take a look at that early June period, because a lot of this has to do with the goings on politically in Mexico and in the US, which we'll get to in a second. So I think it was the June 2nd election in Mexico that brought in a supermajority for the leftist party. I think it's the Moreno party. And with that, you saw this dollar run up right after the election there. That's actually starting on Sunday night, I believe, following the election on June 2nd there, and continuing over the course of that week and the week following, taking a little bit of a breather as they got up and just barely touched 19 pesos. Funny how markets work sometimes. But you can see the bearish reaction for pesos coming out of this Mexican election, with the idea being that the leftist party's economic policy might be a little bit less conducive to business than the last political landscape, which didn't have this supermajority where the leftist party is really running all parts of the government. Now, why is this important, especially between Mexican and U.S. relations? Well, with a less conducive government towards outside business and U.S. business in Mexico, that could be problematic, because a lot of the gains that the Mexican peso has seen in recent years, and a lot of the strength that the Mexican economy has seen in recent years, has to do with this number here. The fact that 16% of U.S. imports coming from Mexico, and the idea of nearshoring that you might have seen in recent articles has definitely become a big keyword for economists over the course of the last handful of years here, has really been benefiting this Mexican economy. Essentially, Mexico making it easier for the U.S. to do business in Mexico has really brought a lot of business to Mexico, and it has really boosted their GDP and boosted their currency. And of course, the U.S. has appreciated the cost advantages and everything else. But now you have stories like what's developing in Tesla, whereby the idea of a more constrictive Mexican government and also a U.S. government that could get more constrictive to imports. Donald Trump, who now is the favorite to win the U.S. election, has definitely been outspoken about how he would like to increase tariffs for countries like Mexico, U.S. companies doing business in countries like Mexico, and Tesla, for example, in the news a lot about their factory that they are trying to set up in Mexico. The idea of Trump increasing tariffs has caused Elon Musk to actually say that, we're undecided on whether or not this factory is going to go through until we get that U.S. election result. And so that was a piece that was pretty much set to go through, now back on the table for whether or not Tesla would continue to leverage their factories in, I believe it's Texas and California, or build another one in the U.S. if Trump were to be elected. It seems like a one-off story, but obviously Tesla, big market cap company, and would probably account for a big part of that U.S. import number and the nearshoring that has been benefiting Mexico. So with that being said, let's take a look again at this U.S. dollar Mexican peso chart and see where we stand. And what's really interesting is a couple of things. One, like I alluded to earlier, big range, market that's gotten as high as 25 pesos, as low as 16 and change. So could really move in either direction. Obviously, you see a lot of potential for upside, as we're only now getting close to 19, but it had been as high as 25 in 2020. But keep in mind, that was that pandemic weirdness where you have almost every data scientist looking at data sets that include 2020 have to account for 2 or 3 months of data points that are really extreme relative to the long term. But that being said, prior to 2020 and coming out of the pandemic, trading in the 19 to 22 handle range, very normal. So definitely setting up for a potential crash for this peso, at least back to those levels, especially when you not only have the nearshoring bit, the political bit, but also the central bank and interest rate piece of this. Of course, forex price is a big part of their supply and demand dynamics, have to do with interest rates. And what we've seen is a Mexican interest rate that is higher than that of the U.S., and thus what you would deem a higher yield currency. And so a lot of demand flows go into a Mexican peso that is returning interest at 10 or 11%, versus a U.S. dollar, which might be more stable currency, but only returning 5.5%. Now, the Mexican central bank has already reduced interest rates from those highs, albeit slightly. But this U.S. dollar has also seen some demand as a sort of safe haven when there's global economic turmoil, as there has been in recent weeks. Currencies play this relative safe game where it's almost like, okay, if the U.S. economy is more of a safe haven or seemingly more stable than the Mexican economy, then there would be more demand for that U.S. dollar versus peso, especially if the Mexican peso isn't going to be yielding that much more than you would get in the U.S. So that's another piece that could play out here. Obviously, we'll be monitoring the political front in the U.S., what companies like Tesla would do if Trump continues to maintain his position in the polls and predictive markets as the favorite, how that'll all play out. But also, we've got a slew of central bank meetings in Mexico, in the U.S., that will tell us how wide that gap is going to be. Because right now it's around 5 full percentage points. If that comes into 4, into 3, into 2, you might see that Mexican peso return to where it's traded historically. On the flip side, of course, this can be undone, and this could just be a blip on the radar of further Mexican peso strength. But this has been a tough go since June for that Mexican peso.